Hi Saravanan.
Hi, Marg.
So we had the RBI's policy meet yesterday.
Yes.
So it was an surprise pass.
Yes.
Or partially surprise pass.
I think it was a surprise pass only.
Surprise pass.
Yeah.
Yes. So my understanding was like this. The reason why RBI would have gone for a pass after relentless rise of interest rates for 4-5 quarters now.
From May 2022.
22. So
Yeah.
1 year clearly. So one is inflation is responding.
Yes.
Like for an example, CPI has come down from a high of 7.3 or 7.4 to 5.7 or 5.8 levels. So that's one good factor. There is a downward trend on inflation, which means the earlier policy actions are responding.
And the expectation also they have mentioned about 5.2. They have reduced
5.2. It will come down to 5.2
for the next financial year.
Absolutely. And WPI is also on a lower trajectory again. So this would have given them a comfort.
Correct.
So maybe there is a feeling that they are battling out inflation well.
Yeah.
And somewhere there is an element of risk which is emerging for growth.
Exactly. Because of the global issue.
The factors that are outside India probably. So the inflationary pressure which was coming from the global factor plus the domestic has been managed efficiently, and now should we have to focus on growth.
And one more point which I would like to highlight, Marg, is the external factors. Like, we are able to bring down the current account deficit.
Exactly. That was a
software
major thing that
exports have
happened.
improved.
Yes.
And NRI remittances has improved substantially.
Exactly.
Forex reserves we are able to keep at
brought
around
back to 600 plus levels.
So I think this has given comfort to RBI.
Absolutely. So which means now the shift or the precursor to shift from inflation to growth probably.
Yes.
So that can be the inference from what.
No, I don't think they have completely moved out of that inflation concern.
Right.
But they want to balance, as you rightly said earlier. No, now they also want to balance the growth.
Yes.
The one advantage is global growth is not there. It is having a problem. So I think one more factor is crude may not go up substantially. The weakness is there in the other markets.
Yes.
So we can be sure that there won't be any substantial increase in crude prices.
Right.
I think that could be one of the reason comfort also for.
Right. Yes. See, global is now multiple factors.
Correct.
On the one side, probably the Fed is battling out between inflationary pressure on the one side versus financial stability risk, that is
banking crisis.
Yes, banking crisis.
I think that also played a partly
important role in
the RBI policy.
Yes, there is an evenly balanced risk between these two.
Correct.
And they have to balance it out, and that probably would have given some indication for India that our Fed may not be so strong in terms of raising rates going forward.
Correct.
And they may probably go for one more hike or something like that, and then there again a pass may happen.
Correct.
Because of the financial stability risk that is coming into play. So the clear understanding right now is that there is an even balance between inflation and growth.
Correct.
So the risk might probably tilt towards growth going forward.
Correct.
One more thing is that see, if you look at the effective rate out of the policy actions that have gone, we have seen 300 basis point increase effectively. If you look at the call rate, which was at 3.3 a year back, is now 6.3 or 6.5. So that means so much has gone into managing the inflation.
Yes.
So good that it's a pass. Maybe it's a pivot. We don't know.
Yes.